And I'm going to say one thing here. Many are going to not even know we're going through a hyperinflation. And you might think, what are you talking about? Well, I think it's because the public has been manipulated or brainwashed into thinking that gold is just a barbarous relic, that it's risky. So there's no, most people have no clue of what gold is, how important, and silver as well for that matter, how important monetary assets they are, that they've been money for thousands of years. Wednesday, June 25th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at a warning, an alert, a CrackUp Boom alert. And what's a CrackUp Boom? Well, we're going to look at it. Some of you already know, but it can also be hyperinflation. It can be collapse of the currency. And I've been warning this pretty much since I started this channel 10 years ago. And yes, some people think it's crazy to think we could have hyperinflation in the West. But it's one of the reasons why I started this channel, because for me, it's not crazy because I experienced it firsthand growing up in Brazil in the 70s and the 80s. And one of the reasons as well, I think why people sometimes say to me they like to watch me, because I'm always calm and not nervous about things, even though things look like they could go to hell in a handbasket, so to speak. It's probably because I know that it's not the end of the world. Currencies are just, especially fiat currencies, are just a creation, a human creation, and humans are not perfect, and things come and go, things fail, and then something else is born after something has failed. So that's why I don't think you should be too concerned. Of course, you have to be prepared, and that's what I've been trying to warn people about. And that's why I've been telling people that having a little bit of anything really that holds its value outside the financial system is a good thing. Of course, if you have a lot of savings in fiat currency, you should think about having some physical gold and silver as well. But before I go further now into the CrackUp Boom, just wanted to thank all of you for your interest in the channel. Make sure you hit the like button if you enjoy my videos. It helps get the video out there, get more views. Yes, we're up to almost 142,000 subscribers, but we also need to get more views. And make sure you also subscribe if you haven't and you enjoy my videos. So I think it's always good to look at the definition of things, and there's no better source of study about currency collapse, CrackUp Boom, hyperinflation than the Austrian School of Economics, and in particular Ludwig von Mises. And I've got his book here in my study. It's called Human Action. It's his opus. It's his opus. Like, it's almost like the Bible for the Austrian school. It's a very academic book, but I think it's really key if you want to learn more about the Austrian School of Economics. And what's the Austrian School of Economics about? Well, it's like the antithesis of the Keynesian School of Economics. So it promotes small government, the rule of law, freedom, free markets, sound money, non-intervention by the government. Well, that's a taken if you have small government, right? And on page 428 of Human Action, Ludwig von Mises describes the CrackUp boom, and I've talked about this many, many times, and some of you might be tired of hearing about it, but of course we get new viewers, and even for those who are tired of hearing it, and sometimes I get tired of thinking about it, but it's really important to keep refreshing, because you don't want to like not stay alert and vigilant about these things. So let's go through his definition. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The CrackUp boom appears. Everybody is anxious to swap his money against real goods, and no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper, and I put in brackets here, scrap digital entries. There's no digital banking back then when he wrote this. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandats territoriaux in 1796, and with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So there you go. Before we move forward, I want to recommend two books that I've recommended, probably the most recommended books here. One is about the revolutionary France, where they had troubles and they had a hyperinflation that he mentions there in 1796. That's Fiat Money, Inflation in France by Andrew Dixon White. I'm going to put a free PDF below. You can also go to the Mises.org website and buy the book. And as for the German mark collapse in 1923, I'm going to recommend When Money Dies by Adam Ferguson, and I'm going to try to find a free PDF as well, or you can buy it. Those two books have been instrumental in me understanding and what would happen, what the symptoms would be, and all those symptoms I've spoken many times about are coming home to roost, unfortunately. Also, my experience living in a country that had currency collapses has helped me understand it, and it has helped me really believe that it can happen. Where nobody is immune to hyperinflation. So you might be asking, then what's the trigger for the hyperinflation? Well, as von Mises said, it's when the public wakes up, because the public is always, unfortunately, behind the curve. So who's not behind the curve? Who's getting out of Dodge, so to speak? Well, I think it's the major central banks of the world, despite the fact that I don't like the institution of central banking. Yes, there are some clever, intelligent people that work in central banking, and some of them must know how important confidence is. And it's one of the reasons they've been accumulating so much gold for the last 3.5 years, and even before that. And unfortunately, most of these banks that have been accumulating gold are not in the United States. They're not in North America or Western Europe. They're like the so-called developing or global South or BRICS countries, China and Russia. They can see the writing on the wall, but I think it's now other central banks are waking up, even in Europe. And I spoke about the other day that Germany and Italy are big holders of gold. There's a move now to bring $250 billion worth of gold back to their countries that are stored with the New York Fed, because when crisis erupts, especially a currency collapse, if you don't have your gold, you don't have anything. And so the trigger, I think will be when the public gets involved, in particular involved in gold and silver. And the involvement of major institutions like central banking and international institutions is only growing. I saw an article from yesterday. It's from OMFIF. This is like a think tank, like a global think tank that studies the flow of funds, currencies among central banks and big financial institutions. So it's an independent organization. And they came out with this article: central banks turn to gold over the dollar. And it says the foundations of the global economic order are shaking. So I'm going to put a link to this article below in the description, but I'm also going to jump to an article from Reuters talking about this article from OMFIF. And it was published yesterday as well. Exclusive: central banks eye gold, euro, yuan as dollar dominance wanes. And I'm going to say one thing here. Many are going to not even know we're going through a hyperinflation. And you might think, what are you talking about? Well, I think it's because the public has been manipulated or brainwashed into thinking that gold is just a barbarous relic, that it's risky. So there's no, most people have no clue of what gold is, how important, and silver as well for that matter, how important monetary assets they are, that they've been money for thousands of years. They think the pieces of paper and digital entries that we use, they think that that is money. They don't realize that that's just debt, debt that cannot be liquidated, and it's a Ponzi scheme. So they don't understand that. And what I mean by many will not realize that we're going through a hyperinflation is that what simply is going to happen is that all these fiat currencies are going to collapse versus gold, or gold, if you want to switch it around, is going to go through the moon, to the moon. And no one will want to exchange their gold for these currencies. And that's when it happens. If I had to give you a time frame, I think in the next 12 to 24 months, yes, I think one of the triggers as well could be the change of leadership at the Federal Reserve next May. We're already seeing that some Fed governors, one of them was appointed by Trump, already calling for rate cuts. So that's going to diminish the dollar's role as a major reserve currency is going to diminish the dollar's confidence even more. But back to this Reuters article, because there's some interesting comments here regarding that article from OMFIF. Central banks eye gold, euro, okay? And this is what was really interesting. And I'm going to also put a link to the whole article in the description, the Reuters article. It says, after years of record high central bank gold purchases, reserve managers are doubling down on the precious metal, OMFIF said. And this is the key part here. The dollar, the most popular currency in last year's survey, fell to 7th place this year, OMFIF said, with 70% of those surveyed saying that U.S. political environment was discouraging them from investing in the dollar, more than twice the share a year ago. So what we're going to see, unfortunately, for the United States, but also for all countries, we're all going to be affected by this. And that's why we all need a little bit of physical gold and silver. And if you want to add on to your stack, or if you haven't yet and you want to learn more about it, I've got 2 affiliates, one in North America and one in the UK. All the details are below in the description. Miles Franklin in the US. Got a landing page where you can go in there, and for gold investments, you can go on their website, you can call them, you can go and visit them. So let's continue here. Yes, 7th place, the United States. That's not good. But one thing I wanted to say, don't be fooled and think that the way to protect yourself versus dollar hyperinflation is to buy euros and you won. No, you have to stick to gold, because they're going to go the same way of the dollar. All fiat currencies are going to lose value. The other day I spoke about the Porsche to gold ratio that Incrementum, or In Gold We Trust, brought up. I mean, it used to be you needed 265 ounces in the late 60s to buy a Porsche 911 or a Carrera, or whatever you want to call it. Back in the beginning of this century, in 2000, you needed 235 ounces, and now it's down to like 40 ounces. And basically, that's the hyperinflation there. And that ratio is going to go lower and lower. The only problem is, and having lived in Brazil, is that when you have currency collapse and currency chaos, the world becomes chaotic. And why is that? Well, because half of all commercial all commercial transactions, half of those transactions are the good or the service and the currency or the money. So if the money becomes crazy, the world becomes crazy, and you get political chaos. I don't have to say, I don't have to tell you, we've got that. We get geopolitical chaos amongst nations. We've got that in spades. And you get crime, violence, lawlessness. So unfortunately, unless you live in a really safe place that is kind of, how can I say, immune to this, kind of protected, places like, let's say, Switzerland, Liechtenstein, Dubai, which are very expensive, I don't think it's a good idea to get rid of your gold to buy a brand new Porsche when you only need 10 ounces. That's the only downside. But you can bet that you will have what it takes to come out on the other side and rebuild. People who are holding government bonds, fiat currency deposits and savings, and also holding equity of financial institutions, of private equity, anything to do with finance, I think they're going to be wiped out. Not maybe totally, but their holdings will be worth very little. It will buy them a coffee, not a Porsche. So what other warning is there? Why am I talking about this today? You might be saying, well, we had the ceasefire, everything's getting better, Middle East. Well, yes, maybe so. But something that really worried me yesterday is the fact that the Nasdaq 100 index, yes, it worried me, made an all-time high. And you might think, well, that's good. No, I think it could be pointing to the CrackUp Boom. So because in other countries, and we've got an article here from New World Economics, and it says hyperinflation in Germany, the stock market. Well, the stock market in dollar terms, actually prior to the hyperinflation, it didn't do really well. In dollar terms back then was basically gold. And when you had the final collapse, yes, the stock market did okay, but only companies that were involved in heavy industry that had real things, they did well. Could the Nasdaq do well even though it's a tech base? Yes, it could do, because nowadays technology is something that people value. But I would say that the stocks, the sector that are going to do the best are going to be in the commodity space, and also especially in the precious metal space, gold and silver miners. And just wanted to show you another example of what happens in hyperinflation. Someone posted this 5 years ago, and it says, I just wondered what happens during hyperinflation with the stock market. Had a look at Venezuela's stock market, IBCV. Well, look at what it did during the hyperinflation. It was, it was one of the only places to go. People will go to the stock market and to gold and silver and hard assets. So I think it's really serious that the Nasdaq is breaking out. Yes, the majority, unfortunately, are going to be left holding the bag. Am I saying you should buy the Nasdaq? Well, I'm not going to buy the Nasdaq. I'm going to stick to commodities and the mining sector, and also to physical gold and silver. What proportion you allocate your funds in terms of those different types of investments is up to you. It depends on your risk profile. The other thing that happened in Germany, I read this in that article about the German stock market, I'm going to put that in the link as well, is that there's euphoria. People think that everything's great, everything's going up, but it's they don't realize that it's the currency that's collapsing, and it's really perverse and counterintuitive. So I'm going to stop right here. What about the markets? Well, they're pretty quiet. Gold and silver have rebounded a bit. Gold is back at 3,330. Silver's at 36. But I think it's getting to the point where it doesn't really matter where gold and silver are in terms of fiat. What matters is how much gold and silver you have in terms of ounces, or grams, or kilos, or tons if you're a central bank, right? And they're going to continue. They're doubling down. So am I saying you should double down? No, I'm just saying what they're doing. It might give you a clue. So with that, Rudy and I are going to wish you all a very good day. Take care. Bye.